presented by Vedder Price.
Welcome to ETF TV, your insight into the world of exchange-traded funds, issuers, and investments. I'm Margareta Hricova, and joining me today is Jeremy Senderowicz, shareholder at Vedder Price, and Deboah Fuhr. Welcome to the show.
Thank you for having me.
Thank you. Jeremy, great to see you. What are the most important recent and upcoming regulatory changes that are likely to impact the ETF industry?
The most important development has been the recent approval of spot Bitcoin and Ether ETFs. Essentially, under the duress of a court order from last summer, the SEC finally approved the Bitcoin ETFs back in January and the Ether ETFs in July. Another recent regulatory development has been the SEC's essential surrender on its swing pricing proposal that would have, if adopted, induced many mutual funds to convert to ETFs to avoid having to comply with the proposed swing pricing requirements. But the SEC has recently signaled they've pulled back from that proposal and are going to repropose a version which may not involve swing pricing at all. That bullet has been dodged for the time being. The most important upcoming development has been the pending applications to offer ETF share classes of mutual funds. This is the structure that was patented and pioneered by Vanguard over 20 years ago. With their patent expiring last year, many registrants have applied for exemptive relief to offer ETFs as a share class of mutual funds. So far, the SEC has not approved any of those applications, and they have also signaled that they're not looking to approve the share class applications anytime soon.
And how have regulatory developments shaped the ETF marketplace we see today?
I think that's happened in three key ways. First, with the adoption of the ETF rule several years ago, it made it a lot easier for managers to offer ETFs, both because they didn't have to acquire exemptive relief, and second, coupled with the growth of white label platforms, has made it easier for managers that didn't necessarily have experience managing 40 Act funds to offer a couple of ideas in ETF wrapper without having to build out their own trust and related 40 Act compliance and logistical infrastructure. The second key development, I think, was the SEC's approval of the ability to offer semi-transparent active ETFs. That had the effect of drawing several big managers off the sidelines and into the ETF business for the first time. Now, those products have not taken off in the way many people hoped, but getting those managers into the business had a powerful signaling mechanism to the rest of the market in terms of the ETF's maturation as a business line. And in fact, many of those managers who originally had only intended to offer semi-transparent ETFs, once they were in the business, they've pivoted to offering fully transparent ETFs. The third factor, I would say, was the adoption of the derivatives rule several years ago. It brought leverage and inverse ETFs under the ambit of the ETF rule, from which they'd originally been excluded. And this had the effect of opening up those products to potential new competitors, rather than just the few sponsors that had acquired the exemptive relief for such products before the SEC implemented its moratorium over a decade prior. And the second thing was that it provided the pathway to offer leverage and inverse single stock ETFs, which have really attracted a lot of attention over the last couple of years and represented a whole new product line in the ETF marketplace.
And how might the upcoming election impact the ETF industry and the regulatory regime?
The upcoming election will essentially determine which party controls the Securities and Exchange Commission. And that can have a real impact on ETFs. The first way would be whether or not the SEC approves the exemptive applications we mentioned before that would allow mutual funds to offer ETF share classes. If the Republicans win the election, there is a good chance these applications will be approved in one form or another. And if the Democrats win the election, there's a good chance they won't be. There have been some filings for Solana ETFs, which an observer from Bloomberg recently characterized as a call option on the election. And similarly, the side that wins the election will probably determine whether or not those Solana ETFs are approved.
That's great. Thank you for joining us.
It was great to be here.
Thank you to Vedder Price for sponsoring this episode and to all of you for watching. To watch prior episodes and to see news from the ETF industry, visit us at etftv.net. Thank you.
ETF TV News does not provide investment advice nor recommend products.